So we'll start with GST, Goods and Services Tax. Goods and Services Tax. It's an indirect taxation. Okay. Here, you have to understand when it is going to be taxable. When it is going to be taxable. The point in time at which it is going to be taxable is called taxable event. Okay. If the goods are supplied by a taxable person to any persons, where that supply being taxable supply, then automatically it is going to be taxable. Taxable person supplies the taxable supply. Okay. Clear? So what are the points you have to understand? Who is called taxable person? You have to understand. What about the taxable supply? You have to understand. Is it for any or any specific person? That we will be learning later on to some specific persons. Okay. So the tax will be attracted at the point in time of supply. So this term is very, very important for you. The term supply is very, very important to decide whether the supply happens. If the supply happens, then automatically GST will be leviable. Is that okay? Now, A supplies either goods or services, supply of goods or services to B. Okay. Confirm whether A being the taxable person and this supply being the taxable supply, then automatically it is going to be subject to GST. It is going to be subject to GST. And tax will be leviable on what? For this supply, B will make the payment that is called consideration. Consideration. So then automatically GST will be leviable on satisfaction of these conditions on consideration at the rate specified here, at the rate specified in this act. Okay. Now you have to understand place of supply as well as time of supply also. Time of supply also. At what time this is going to be taxable? At the time of supply, in the from the A's godown to B's godown, or at the time of receipts by B, or if the goods not received by B, at what point in time is going to be taxable? So all the questions may be addressed by studying the time of supply. Next one being the place of supply, from where it is supplied, from Trichy to Chennai or Trichy to Karnataka. Okay, any other place in Karnataka. So if the product moves from one state to the other state, then that will be called as interstate supply. Within the same state, intrastate. So the place of supply also very, very important. Time of supply, place of supply. The rate mentioned in GST Act will be the final. So as per that rate, you are going to levy the tax. While levying the tax, you will calculate the tax on the consideration. There may be chance of manipulation of consideration. So Act specifically says how can you value if the consideration being manipulated. If the consideration is manipulated, valuation of GST consideration also be applicable. So you have to understand this one. Clear? And who has to pay the tax? Is it being the supplier or recipient? Usually, tax is payable to the government by the supplier collected from the recipient. So usually A collects the tax from B and pays this to the government. This will be the usual format. Sometimes recipient he himself goes and pays the tax to the government. Two types of levying the tax. One is forward charge, another one is reverse charge. So these things are also be applicable here. So predominantly, before you start to understand what is the time of supply, what is the rate of supply, and value of supply, at what where it is supplied, so all these questions may be addressed later on. But first and foremost question to be addressed here is it a supply? So first of all, you have to understand whether it is a supply or not. If it is being the supply, automatically the other question will come. So taxable event. The main thing is supply is the taxable event. The taxable event in this case being the supply. Okay. Taxable event occurs when the taxable person makes taxable supply. What are they? A, the person who supplies should be a taxable person, and this supply should be taxable supply. So all the supply will not be taxable. Some supply may be exempted. Those things will not be taxable. Okay. So you have to consider whether all the supplies are given here being the taxable or not. If this supply being the taxable, automatically it will be falling into this case. Now, who is called taxable person? Taxable person is nothing but a person registered with the GST under section 22 or 24. We'll study that later on, the registration process. And taxable supply of what? It may be either goods or services, or partially goods and services mixed up both. And which is liable to tax is called taxable supply. Clear? So you have to understand these are the terms. Okay, supply by a taxable person, and then supply can be a taxable or non-taxable. Only in case of taxable supply, then automatically the GST levy will be attracted. Clear? GST levy will be attracted. Section 7 deals with supply. Section 7 of GST, scope of supply. Is that okay? So the section 7, where the first point we'll be dealing here, class A. Supply includes, these are the points you have to understand. First, the first set, these are the 4 points you have to understand. Okay, the 4 blocks. Okay, to consider this being the supply. Clear? So, A and B. From A to B, there may be sale, transfer, barter, exchange, license, rental, lease, or disposal. Whatever the nature may be. Right. When, sir? Now or later. Now or later. Okay. For what? For what? For a consideration receivable from B. And why A transfers these goods to B? Because it is his business. It is his business, or it is his furtherance of the business. Clear? Because of these reasons, this will be called as supply and taxable. Clear? So, A and B, from A to B, goods are transferred. From B to A, consideration is transferred. And A does this for what? Okay, as his own business, or maybe furtherance of business. Furtherance of business. Is that okay? And when the goods are transferred, either now or future. In simple sense. In simple sense. Now let me explain in detail. Supply may be not only goods, or it may be supply of goods or services, or both. Right? It's not only goods. Supply includes sale, transfer, barter, exchange, license, rental, lease, and disposal. All these things will be called as supply only. Is that clear? Sale, transfer, barter, exchange, license, rental, lease, or disposal. Sale, that you know, what is called sale? Transfer of ownership and title. Transfer of ownership and title of your property from one person to the another person for a price. I sell the goods to you and I'll get the consideration from you. This is sale that you'll understand. Transfer is nothing but transferring from one location to the other location. Okay, probably, okay, XYZ company has the factory in Andhra Pradesh, as well as they have the depot or warehouse or showroom in Chennai, Tamil Nadu. Okay, after manufacturing, all the goods are transferred from Andhra Pradesh to Tamil Nadu, both are now owned by the same entity. Okay, it is not sale, but of course, the goods are transferred from one location to the other location, also considered as supply. Okay, why is that? If the tax is levied in Andhra Pradesh, the income will be shared by the central government and the Andhra Pradesh state government equally. If the goods are manufactured in Andhra Pradesh and later transferred to Tamil Nadu, means what happens now? Who is going to share this income? While selling these goods in Chennai, automatically Tamil Nadu government demands give me 50%. But all the resources are utilized or support of the government also received from Andhra Pradesh and later on transferred to Tamil Nadu and allowing Tamil Nadu government to share. No, that will be a typical problem here. So that automatically what happens? If you are transferring the goods from one state to another state where both the entity are under your own control, yet though it may not be sale, considered as supply for this purpose. Considered as a supply for this purpose. Is that clear? So, sale, transfer, factory to depot. Not only that, I may sometimes use the right to use, okay? Giving my property for a rental purpose. I allow you to use my property for a rental purpose. Then that is also considered as supply. If I sell the house property to you for a consideration, will it come under taxability and the GST? Definitely not. So it will not come under GST because it should be goods or services or both. Okay, when it is being the house property, it's not goods, it's a immovable property. As it is being the immovable property, sale of house property will not come under GST. Of course, for that you have to pay the registration fees to the state government, right? So that's a registration, sale deed. Well, recording or registering, you have to pay the registration fee. Is that okay? But if I let out my property, house property for a rental purpose, that will be coming under supply. For that GST will be attracted. So which is called transfer. Transfer to right to use. You are not going to be the owner of the property, but you have the power to use it. You have the power to use it. Sale, transfer. From factory to depot and right to use. These two will come under. And barter. Barter. So barter is nothing but one item for the other item, exchanging. Okay, A and B. Probably A may be selling his laptop to B, and B in return gets what? Probably supplies his own books also to A. Okay, books and stationery items sent by B to A. This is called barter. Here two supplies there. A supplies laptop, B supplies books. So A has to pay the GST for the laptop supply, B has to pay the GST on the book supply. Is that okay? This is called barter exchange, means exchange of goods and services without any money. Example, doctor gives consultation and barber provides the haircut. So doctor and barber. Doctor gives the free consultancy, okay, to B for the medical treatment purpose, and B in return haircuts for doctor with free of, without any consideration. Here two services are there, two supply are there. Doctor supplies doctor services and barber supplies his own hairstylist service, right? So this is coming under barter. Sale, transfer, barter. Exchange, swapping of assets. Okay, exchange offer. You might have seen, give your old mobile or laptop, you will get the new mobile or laptop. And where there is a small price adjustments, or give your old car and get the new car. Those things are exchange. So you have to understand the difference between barter and exchange. In case of exchange, new will be purchased by giving the old, by giving the additional consideration. So buying new car in exchange for an old car. Now, license. Legal permissions given to carry out the business. So, if you want to go for mining any minerals out of the earth or software license and all these things, you have to get the permission from either state government or the originator. So, that will be called as license. If I give you the license for a consideration to extract the minerals, and that is also supply, for that GST will be attracted. Okay. And lease, legal agreement for using the property. Okay, I allow you to use my property for a consideration. This is called lease. Land, buildings, vehicles, finance lease. Land, buildings, vehicle, and finance lease. These are called lease. Is that okay? And disposal. It is not only sale, even discarding. Whatever the asset I purchase later on, I discard that without selling. I don't want this asset anymore. I can simply dispose it off. How can I dispose it off? Without using for my purpose, I can send it to outside, or I can offer this to my friend or some orphanage at free of cost. Those things are coming into disposal only. Though it is disposed to also be considered a supply in some cases. We'll study all those cases later on. So sale, discarding, or any other mode of getting rid of an asset will be considered as supply. So supply means it's not only sale, it includes what? Transfer, barter, exchange, license, lease, disposal. All these things will fall under supply only. Is that okay? Hope you will be now able to understand point number 1. So A, B, goods and services moving from A to B and from there to A, he gets a consideration. Is that okay? And this process supply may include sale, transfer, barter, exchange, license, rental, lease or disposal. Next, when the sale happens, now or later. Okay, now or later. What about the later? Reservation. Okay, I booked the ticket to travel 3 months later. Then it is also be supplied because I get the consideration for that. I deliver the goods or deliver the supply of services sometimes later. Okay, agree to supply this later on. Also be considered as supply. It's not necessarily to be supplied today itself. Maybe agreed to be supplied later on. So made or agreed to be made later on. And predominantly you need to have a consideration. Okay, you need to have in return some benefits which is called consideration. And that too, A should do this for his business purpose or furtherance of business purpose. Furtherance of business purpose. Furtherance of business purpose. These are the two cases. These are the 4 points you have to keep in your mind. Okay. Sale, transfer, barter, exchange, license, rental, lease or disposal is the first point. Second point, supply now or agreed to be made later on. 3, in return will get a consideration. Fourth, the A does this as his own business purpose or it may be furtherance of business. Okay. For example, what happens, I may purchase the car. Sometimes later it becomes worn out. I want to sell it off to purchase the new one. Do I want to pay the GST? No. So I don't want to pay the GST because car is purchased for my personal purpose. I don't have the intention to buying and selling the car as a regular business motive. As I don't have any business motive, I can sell now and then whenever I am not in the need of this car anymore. Further GST will not be applicable. Instead of that, if I have the banner to sell pre-owned cars with the name pre-owned cars, I purchase lots of second-hand cars and selling the second-hand cars, then automatically that will be coming under GST because it involves what? Business nature. What is called furtherance of business? Furtherance of business is nothing but I make some payments, okay, for doing a market research. Will I be able to expand my business in another location? Probably I may establish my business in probably in Chennai or Bangalore. I send a team to analyze and check whether I'm able to establish my business there or not. So they will verify and give me a report for that. I may make a payment. So it may be only one-time payment. Yet the intention of doing this is to expand my business. It's called furtherance of business, also being part of supply only. Is that clear? Now, what is called consideration, sir? Now let's see. So A to B, supply of services or goods done now or later. We have studied this. In return, B should pay consideration. Now the question is all about what is called consideration. We have studied that this concept in detail, and now also we learn, and later means reservation. Like very easily you can link this with the reservation without any confusions. Now, what about the consideration? Okay. Now, A and B. Probably here is an example. A and B. A being Dr. A, B being the patient. Okay, B being the patient. Doctor gives medical treatment. In return, B hands over the car free of cost. Then what is the consideration? Consideration will be equivalent to the value of the car. Value of the car. Clear? So from this it is very clear. Consideration may be money, but not necessarily money only. Other than money also possible. Other than money also possible. Clear? Okay. Now, value of the car. Value of the car. Now, A supplies the goods to B. A supplies the goods to B. Okay. Probably you can go and purchase a note from ITC. Huh? The classmate note. How many of you seen the classmate note? And behind that there may be a small wordings also. How many of you purchased the classmate notes? Do you have? So ITC, it's a product of ITC with a quality paper. Uh, a small revolution also happened in note industry. Earlier, smudging will be happening a lot of time, but thereafter, with a note published by ITC company, the classmate note with good quality and giving a feel to write better. So A sells the goods to B, supply of goods, which is nothing but note. For that, B gives a consideration rupees 100. Okay. Not only that, A demands to pay 5 rupees to charity. Okay. How many of you noticed that behind the note, every note if you purchase 2 rupees is donated to this charity purpose. That's how the statement may be given somewhere earlier. Now I am not sure whether it is still available today. Earlier, whenever you purchase any commodity as a social cost in the back side, for purchasing every commodity, 2 rupees is used for this charity purpose and all. Is that okay? So the price is 100. They state 2 rupees is for charity purpose. Only I am collecting 98 for the product. If you offer only 98, will he be able to accepting this? Definitely no. So he will compelling you to pay this 2 rupees also for the charity purpose. So what is the consideration here? The consideration directly payable by B, buyer to A. Not only that, because of this purchase, seller demands you to pay another 2 rupees. This 5 rupees should also be forming part of consideration. Forming part of consideration. Is that clear? Now, goods as consideration. You are getting the goods, not in money. A doctor receives a free car in exchange for medical treatment. In that case, consideration is equal to the value of the car. Second scenario being act. What is an act? You take this note, give me 100 rupees. As per my instruction, you have to give another 5 rupees for the charity purpose. You have to do some actions as per my request means the value of that action is also forming part of the consideration. Example, a compulsory donation required. Compulsory, it's not voluntary. Compulsorily, you have to donate this, only then you will be able to get the note. So, for purchasing a notebook, then 100 rupees for the notebook, 10 rupees you have to pay for the charity purpose. Then, what is the value for the note? Here, it's 110 only. Is that clear? And the last one being the forbearances. Forbearances. Promise to refrain. Okay. What is that? A, B. Okay. Now, so A demands him, okay, what? Refrain the activities. Refrain the activities. Okay. Otherwise, A offers him some consideration. And in return, B refrains some activities. Refrain. Refrain is nothing but B will not do the business for a longer period. Is that okay? To make you still more comfortable to understand, Apollo Hospital, Dr. A. Apollo Hospital and Dr. A. What happens here? Dr. A renders services, supply of services now and then, visiting to treat the patients now and then for a small consideration. Is that okay? Clear? This will be supply only. This Dr. A is not what? Employee of the company. Okay. Apollo Hospital will have the doctors as the employee, or sometimes some doctors will come now and then as a consultant. Both the way may be possible. If they are employed means compulsorily, it will be a salary part. It will be a salary part. Okay. Clear? It will be salary part. Okay. Now, instead of that, if he comes now and then, 1 hour and 2 hours, and based on the case to case basis, he may be paid, then automatically GST will be applicable. If you are being the employee for the employer, any services rendered to the employer for the terms of contract of the employment will not come under GST, exclusively excluded for the GST calculations. But if you are coming now and then for a small contract basis job, and for that if I am getting any remuneration, not remuneration, a commission like honorarium like, then that will be coming under GST only. That will come under GST. Is that clear? Now, Dr. A has to pay what? GST on this, because Dr. A is the supplier of services, and for that Dr. A gets a consideration, it will attract GST. And apart from that, Apollo Hospital now offers him additional consideration. For that, Dr. A guarantees not to do the job, refrain from the job. Mr. Dr. A has a separate clinic in his town which is nearby Apollo Hospital. So if Dr. A is invited to Apollo Hospital, case to case basis fees also fixed for treating the patient, and it may be around 500 rupees or 1000 rupees per visit. And nearby, if he has a clinic, okay, he charges 300, means definitely Apollo Hospital will be in trouble. Always you'll prefer to go for the clinic expecting some discount, not to the Apollo Hospital. Is that okay? Not to the Apollo Hospital. So Apollo Hospital now traps him not to do the separate job other places. You have to stop doing this. For that, consideration is payable. Then this refrainment will also be considered as a consideration. Okay, a person agrees not to carry on business for 10 years in exchange for a benefit. In this case, value of the agreement to refrain from the business is the consideration. So these are the types of considerations we may expect. So consideration other than money form also we have. One is goods being the consideration. Another one is involving any some action will also be consideration. Another one is not to act. Not to act is nothing but forbearances or promise to refrain. So these things will also be considered as consideration only. Okay. Clear? Now, sir, what happens if we don't have the consideration, sir? If we don't have the consideration, it's not supply. Okay. A to B, there should be supply of goods or services. In return, from there to here, there should be consideration. A to B, goods or services will be supplied, and in return consideration should be there. But what happens, sir, if there is no consideration? If there is no consideration, automatically it is not supplied. It is not supplied. So from this, it is very clear, 4 conditions should be satisfied. What are the 4 conditions? Sale, now or later, for a consideration, and in the course or furtherance of business. All the 4 conditions should be satisfied to call this being the supply under GST. Is that clear? Now, if there is no consideration, then it is always considered as not supply. Here. What about the fines and personal payments, sir? Paid for violating traffic rules. Violating traffic rules. Okay, you park your vehicle where the no parking board is installed. So what happens then? 100 rupees or 500 rupees penalty is levied, and for the penalty GST is there or no? So GST will not be applicable. Clear? Fine paid for violating traffic rules will not come under um, GST. It's not supply. And personal payments, if you are getting it from your parents, pocket money, alimony, like a divorce settlement, those things also be considered as not supply. Okay, because there is no reciprocal one. A, B. A should give some goods or services, in return B should give the consideration. In case of fine, there is no action from A to B. Okay, similarly, in case of pocket money, there is no action between A and B, only consideration passes. And alimony also. In these cases, of course, this will not be supply. And in case of donations, okay, A donates to some temple, okay, say, maybe lights and audio system donated by A to temple. In return, temple gives him nothing. Okay, in some temples and other places, you see this light and the audio visual aids donated by so and so, like donor's name may also be printed there. Is that okay? In this case, three conditions should be there. One is recipient should be charitable organization. Okay, and it should be donation. The recipient should be the charitable organization, and it should be donation like an absolutely philanthropic nature. Okay, these three conditions should be fulfilled. Okay, donation to charitable institutions, not supply if all the conditions are met. What are the conditions? Recipient being the charitable organization, and the donation may be in the name of means the character of this being the donation. No quid pro quo. Okay, means I give and in return I don't get anything. Okay, no quid pro quo. Philanthropic purpose. Philanthropic means out of my helping tendency I'm doing this. Then it is called philanthropic purpose, and these three conditions should be satisfied. Only then it will not be supply. And while donating all these things, a big advertisement banner also installed there, and that will be coming under supply, because you are having the intention to promote your business routing through this donation. Then automatically this will be coming under supply. I don't have any other benefit here, will be coming under philanthropic nature. And art and insurance. So let's see two aspects here. One is art, another one is insurance related. In case of art exhibitions, okay, exhibition is conducted. Okay, exhibition is conducted, and where many artists may send their own drawings or some other handiwork to be placed here. While sending the goods from artist to the exhibition to display will not be coming under supply, because in return nothing is there. Anyhow, sometimes later the article may be returned. But some customers visiting the exhibition, if they purchase by paying the consideration, then that will become supply. While sending the goods from the artist room to exhibition room will not be coming under supply. Is that clear? Artwork sent to galleries for exhibition, not supply, because no payment by gallery. There is no reciprocal payment you will be receiving from the exhibition, right? But if the goods exhibited there, purchased by some customers, and if you are getting the consideration, that will be part of consideration only. Then automatically that falls under supply. Okay, some of the examples we have studied here. Fines and personal payments are not consideration, means not supply. Donation to charitable institution are not supply. And art and insurance, where we have completed art. Artists sending their own artwork to the gallery or exhibition, not supply, because in return they will get nothing. But later on, if customers visiting the exhibition purchases, then that will be supply. Until that, it's not supply. In case of insurance, you have to understand the concept called no insurance, no claim bonus. No claim bonus. How many of you heard about this term, no claim bonus? Right. So probably you assume we have a Star Health Insurance. Okay. And A. So Star Health Insurance gives a mediclaim policy. Mediclaim policy. In return, A makes a payment, which is nothing but insurance premium. So insurance premium may be 10,000 rupees per annum. Per annum. Okay. So because of this payment, Star Health Insurance giving him assurance to support around 4 lakhs rupees per annum. Any medical emergency, you can go and admit to any hospitals having tie-up with the Star Health. You can spend up to 4 lakhs. That money will be settled by Star Health. So you get the medical premium from Star Health Insurance Company. But very first year, you don't enjoy even single penny. You have not been admitted to the hospital. You didn't claim anything. So the insurance company is pretty happy. The next year, you don't need to pay 10,000 rupees. You are asked to pay only 9,500 rupees. That 500 rupees discount is called no claim bonus. In the previous year, you're not claimed for any purposes. So you're not required to pay full value. This will be applicable for the car insurance also. If you go for car insurance, the premium may be around 10,000 or 15,000 rupees per year. If any accident and scratch happens, you can go and claim it to be rectified from the insurance company. Okay. But you don't claim even single penny from the insurance company. The next year, if you go for the renewal, while paying the renewal premium, they will ask about have you made any claim the previous year? You can say, sir, I didn't make any claim the last year. If you don't make any claim, you will be having a discounted premium to be payable later on. So the difference between these two 500 rupees is called no claim bonus. No claim bonus. So there was an argument. A is now foregoing the claiming. Because of that, this insurance company offering him 500. So this is a supply, like there was a dispute earlier. It is now clarified. No claim bonus. Insurance company offered discounts, but the insured provides no service in return. So he gets a discount, but for this discount, there is no any other services between Star Health and A. So this 500 rupees reduction will not come under supply here. Clear? Now, in some cases, we have been given some clarifications. See, equipment sent for repair will not be supplied. Okay. So A has supplied the goods to B. Okay, which is a big plant and machinery. Okay. So A is a seller of plant and machinery. He sent the material, plant and machinery, and installed in the factory of B. Sometimes later there is a repair. To rectify that, lots of equipments are required. So A sends the equipment to B for repair purpose. So while sending the goods from A to B, now will it be falling under supply, sir? No, because in return there is no any consideration. This equipment is sent for repairing the plant and machinery only. Okay, after the repair, that equipment is again retransferred to A. It's not considered as supply. Why do we want to get so much of confusion, sir? It's very clear, See, while making the goods move from supplier point to the recipient point, it will be transported through some lorry or container, right? During the check post, they will verify whether it is properly billed and send the goods from one location to another location. If it is properly billed, if there is any GST payable amount due or not paid properly, all these things are investigated. By the time you have to tell them, this is the goods transported, this is the equipment transported only for the repair purpose, it's not supply. You have to get the invoice, means the bill of supply in proper manner. Otherwise, there may be lots of confusion. So it is not supply. You have to understand it is not supply. Equipment sent for repair, not supply. And free replacement of spare parts during the warranty. Some parts are now replaced. Here, one part is replaced. Sir, this is damaged. Sir, no problem. I will replace this. And that replacement is also not considered as supply, because parts is sent, and in return, A will not get any consideration. And penalty for late loan payment, not a supply. Okay. For example, lender and borrower. So lender lend around 10 lakhs rupees. For that, B has to make around 15,000 rupees installment per month. Okay, per month, together with interest. This 15,000 will have interest component as well as principal repayment also. But he missed to pay in due date. So he delayed by 10 days. Because of this 10 days delay, 15,000 along with it, the late fee 500 rupees is payable. Now the question is, will this late fee will be applicable for the GST or supply? No, this will not be supply. This will not be supply. So penalty for late loan payments not supply. Clear? So some civic clarification, Central Board of Indirect Taxations and Customs, administrative body, right? So that board gives some clarifications related to this one. Equipment sent for repair not supply. Free replacement of spare parts during the warranty not supply. Penalty for late loan payments also not supply. In case of joint venture transactions, and if it is being the cash call or cash call for services, cash call being the capital contribution not supply, cash call for services, then it is considered as supply only. For example, ABC is a joint venture entity where A, B, C are the joint venturers. Okay, A, B, C are the joint venturers. Is that clear? Now, as A, B, C are being the joint venturers, what happens here? They have to deposit what? Their own capital contribution. Capital contribution. In return, the service offered by the joint venture is common to all. No problem. So you deposit your capital and we enjoy the benefits commonly. Okay, that joint venture is for the common benefit only. No, while sending the capital, and ABC offered some common services to all the three. Okay, common services. This will not be coming under supply. Suppose A demands out of that a specific service for a small consideration. He made a payment of 1,000 rupees and ABC offers him a specialized supply of goods alone. Then this part is supply. Okay, invest your money and jointly we operate with this capital and offer some common benefits. Then that will not coming under supply. That investment is called as capital contribution. Cash call. Cash call is nothing but demanding to deposit the money. So the joint venture demanding the cash to be deposited by the three joint venturer is being the part of the capital, no, then it is not supply. If A gets a specific service of anything or any specific goods from ABC, and automatically ABC now demands a cash to be payable for that specific service, then that will be a revenue like, and it will be coming under supply of services. Is that clear? Now, let's move on to the last component here. In the course or furtherance of business. In the course or furtherance of business. Okay. So, whatever it may be, the activity done by A to B, it should be for the business nature, business purpose, or it should be furtherance of the business purpose. Okay. It should be business purpose or furtherance of business. In the course or furtherance of business. Okay. In the course of business is nothing but already explained. I have my old car, sold and purchased the new car. Selling my old car is not my business. So GST will not be attracted. But I am running a second-hand car dealer shop. If I purchase and sell, then automatically it's a business activity. So automatically GST will be supply. It will be forming part of supply only. Refers to the regular business transactions carried out for a revenue generation. For example, a doctor treating patient for a fee is considered as a supply, and as it is in the course of the business. Okay. Similarly, doctor's emergency, okay, gives the treatment to his own family member will not be falling into the supply. Clear? What about the furtherance of business? Refers to the activities that promote or expand. So I want to check whether my business can be expanded to the other location or the same location. Can I add a new product? For that, if I do any marketing search or survey ahead of that, any expenses payable for that is related to the business. Related to the business. Hyundai appointing Mr. X as a consultant for what? Study the market for a new manufacturing unit. So the new manufacturing unit currently I don't have. A new unit supposed to be started. It's only furtherance, not current business, development of the business. Also being considered as furtherance of business. For that, if I make any payment, it is related to the business only. Also falls under supply. And personal transactions, already told you, no, doctor giving the treatment to the family members, so his own family members will not be having the intention to make any profit. So personal transaction. And even unrelated to business, Mr. X purchasing jewelry for personal use. Sometimes later, probably 3 years later, he sells and gets a new jewelry. Okay, not supply under GST. This will not be supply under GST. Is that clear? Okay. So hope you'll be now able to understand the importance of supply. I started with what? Scope of supply. Because supply is the main point, which is the taxable event. What is called taxable event? Taxable event occurs when a taxable person makes taxable supply, or that event attracts a tax liability. That event attracts a tax liability. To check whether tax liability is applicable or not, all the things will come. So you need to know whether it is a supply or not. Okay, who is called taxable person? A registered person. And what about the taxable supply? Subject to GST leviable will be called as a taxable supply. There are some supply will not be falling under taxability at all. We'll see that later on. Section 7 deals with scope of supply. Now, Section 7, subsection 1, supply includes these things and 4 conditions are there. Sale, made, consideration in the course or furtherance of business. Is that okay? Now, transactions between entities and members. Okay. Transactions between entities and members. Okay. C, XYZ trust. XYZ trust. We have members here. We have members here. Okay. Members. Any activities done by this trust to members or vice versa, for that there is a consideration. Okay. Then automatically this will be considered as supply. This will be considered as a supply. Provided XYZ trust being non-individual. Non-individual. Okay. This is separate person, this is separate person. In income tax, you might have studied mutuality, doctrine of mutuality, while studying the income from house property. Let me explain that logic here once again. As per the doctrine of mutuality, XYZ club, where members will make the payment by way of subscription, membership fees, subscription. Okay. And this XYZ club has around 100 houses inside, 100 houses, where these houses are let out commonly to all the members. Okay. Now the question is, will it be falling under income from house property in the hands of the club? Definitely not so, because this club is nothing but a group of members developed the house construction, means a small colony for the common benefit of the members only. So, for example, okay, a family of four, Mr. A, Mrs. A, and major son and minor son. Okay, if A renders any services to minor, or spouse in return gets any benefit, will it be forming under supply of services? No, sir, it's only family, sir. Within the family, whatever things happening, you cannot consider this being the supply for the taxability purpose. One family. Similarly, XYZ company, club or trust or entity, and the members will be considered as a one family. Any common support done by these entire family members out of their own common fund will not be coming under supply. Provided, in case of GST, if the service provider being non-individual and recipient though being the member, for a specific consideration, if he is getting any activities from the non-individual entity, then will be considered as supply. Okay, the doctrine of mutuality is escaped here. Okay, so this is very, very important point. Activities, transactions by non-individual to its members or vice versa for a valuable consideration deemed as a transaction between separate persons. Okay, deemed as a transaction between the two separate persons, automatically GST will be leviable. Is that clear? Now, we'll start with the exceptions. One predominant exceptions being the import of service. Okay. India and USA. Okay. Supplier and recipient. Supplier or recipient. And for that, a consideration is paid. Supply of goods. For the recipient, supply of goods or services. For the recipient, made a payment for the consideration. Or what happens? May use it for business or furtherance of business or personal purpose. Or personal purpose. So you have to understand the main difference between the earlier case and here. What is this? Even though R gets it for his own personal purpose, automatically it will be falling under supply. Okay. An earlier case for the personal purpose, it's not supply, but here for the personal purpose also, if you get, then it is called supply only. Import of service. Sorry, I make a correction. Service. Service. This is called import. Not goods, only services. Confined to services only. Supply of services. If you are getting the supply of services from some foreign supplier, further consideration is paid. After the import, that imported services is used for your business or personal purpose, doesn't matter. Okay, doesn't matter. You have to pay the GST. You have to pay the GST under reverse charge, RCM basis. Who has to pay the GST here? Recipient or has to pay the GST. Is that clear? Now, what sort of supply of services possible, sir? Okay. So, if you are downloading any YouTube videos or downloading any other documents through online, or if you are getting any diagram imported from foreign country, they are sending it in email, or if you are getting a coaching from a teacher who is living outside India, okay, some architect who is in outside India, you want to build your residential house property neatly. For that, you are getting the architect design from the foreign architect. All those things are import of services only. Clear? For that, all these things you can use it for the personal purpose or for your business purpose. Yet it will be supply. GST will be payable by or he himself. RCM basis will be applicable. RCM basis will be applicable. In all the other cases, forward charges will be applicable. Is there cases? Can you be able to understand now? So majority cases forward charge will be applicable. In this case, RCM basis will be applicable. Okay. Supply includes this one. This is a predominant one, and this will be also one more item to members. Import of services, whether or not in the course of business or furtherance of business. Clear? Exception number one. Exception number one. Exception number two. Exception number two. What is the exception number one? So one is sale, second one is now or later, third one is consideration, fourth one is business or furtherance of business. All the four satisfied, then this will be falling under supply. If all the four, only one is applicable, then not supply. But exception number one, in case of import, in case of import, especially service only, supply of goods, not goods, only service. Okay. Now or later, okay, consideration is there, but business is absent. Never bother, business is absent, yet this will be supply. Okay. So, last condition not required to be fulfilled. The business condition is not required to be fulfilled in the case of import of supply of services. Import of supply of services. The last one being, this one is okay, this one is okay, and this one is okay, but this one is missing, sir. Consideration. In the absence of consideration, it is not supply. That's how we have seen. But the exception number two, where the consideration is absent, yet this will be supply. First condition, all the four satisfied, sir. No doubt, supply only. But escape from that, sir. Okay, if it is escape, now the next question, is it import of services? Yes, sir. Import of service means the business purpose is not required, yet it will be supply. Sir, consideration is missing. Consideration is missing. Go and check schedule number 1. If it falls into schedule number 1, automatically it is supply. So I am going to deal this under schedule number 1 here. Schedule number 1. 3 predominant schedule you have to be mastered. 3 predominant schedules you have to be mastered to complete the supply scope completely. Schedule number 1, 2 and 3, where the schedule number 1 is more detailed and 2 also more detailed. Third, just like that, you can finish up. So we'll directly move on to the schedule number 1, where there will be no consideration, yet will be considered as supply only. Supply without consideration also be considered as supply only. Now, schedule number 1. Schedule number 1. So we have been given around 4 items here. 4 items are going to be covered here. In these 4 items, consideration is absent, yet will be considered as supply only. Okay. So 4 conditions are there. One is sale. Another one is now or later, you can forget about that. Second condition being there should be consideration. Third one should be related to the business or furtherance of business. Now or later, you can forget about this. It's very simple. All the 3, yeah, of course, consideration. Then this will be supply. Sir, this one is okay, sir. This one is okay, sir. But this is missing, sir. Oh, is it missing? Yes, sir. Then check whether it is import of service. Import of service. Okay. Whether it is import of service. Yes, sir. Then supply. Then supply. Yes, not. Sir, sale is confirmed, sir. Business also confirmed, sir. But consideration is missing. If consideration is missing, then go and check schedule number 1 listed items. If it is listed under schedule number 1, then it is supply. No, sir, it is not there, sir. Not supply. Then not supply. Is that clear? So now my question is the exception case. 4 predominant case, 1 you can forget. Now and later you can forget. And 3 predominant case, there should be sale in simple sense. That includes what? Sale, exchange, barter, license, transfer, all the things will come. Consideration, it may be monetary and non-monetary and all will come. In case of non-monetary, in return you will get some form of goods or some actions, some forbearances. May be possible. We'll see the term consideration later in detail, right? So these are the 3 things. And business related to your business activity to make the revenue generated doing this activity. And furtherance is nothing but development. So these are the cases we have studied. For all the 3 conditions satisfied, then it is supply only. It is supply only. There is no doubt at all. But sale is there, consideration is there, but business is missing. Then check whether it is import of services. Yes, sir. Import of services, automatically it will be supply only. Sir, consideration missing, sir. Supply is there. Yes, sale. Supply means sale. Yes, of course, supply is there. And business and the furtherance of business is there. But consideration is missing. Go and see the schedule number 1. If the condition, the item specified in schedule number 1 is there, then automatically it is supply, otherwise not supply. Clear? Before I deal schedule number 1 in detail, let me explain the concept called ITC. The concept called ITC. Okay. Before I go. So this one I complete here before I go further. Resident Welfare Association of Sanskrit Society supplies air conditioners to its members. Okay. What they supply? AC. In return, members will pay a price. But of course, the price is concessional one. Doesn't matter. Non-individual to its members for a variable consideration will be deemed to be the transaction between 2 separate persons and supply only. Hope you will be now able to understand this point. And Resident Welfare Association collects maintenance charges from its members for service provided. Okay, maintenance done, and for that the fees is collected. RWA, Resident Welfare Association, being a non-individual, member individual, then automatically it will fall under supply only. Right. Now, let me explain the concept called forward charge as well as reverse charge. Forward charge and reverse charge. Before I go further, it's better you need to know this. Supplier, recipient. So, you purchase a note from the stationery mart and you will pay the consideration. 18%, 18, so 118 is collected from you, and supplier remits this 18 rupees to government. Is that okay? 100 rupees is retained by supplier himself. Clear? This is called forward charge. So whenever you purchase anything, You will get the invoice, collected by the supplier and remits the GST to the government on behalf of you. Okay. And of course, this 18 rupees is shared by the state government as well as central government. Central government will get 50% 9 rupees. State government, the state in which this supply happened, no, that state will eligible to get this 9 rupees. Maybe if the sale happens in Tamil Nadu, this 9 rupees will go to the Tamil Nadu government. If the sale happens in Karnataka, 9 rupees will go to this Karnataka government. Is that okay? So that's why the place of supply is also very, very important. Sir, what happens, sir, if I'm supplying the goods from Tamil Nadu to Karnataka, then the place of supply is very, very important. So we'll study that separately at the final lecture in the chapter place of supply. Okay. For example, lots of confusions will come. If you are going by train to Delhi, okay, you boarded the train in Chennai, okay, you booked the food, dinner, and other things in train itself to be delivered. So after crossing the Andhra Pradesh, you feel hungry, you purchase the dinner in train itself. Now come on, tell me, what is the supply of this food? Is it Andhra Pradesh? While crossing the border, you purchase, but while eating, it crossed the border. Lots of confusions will be there. No, so then you have to go and study place of supply to clarify all those things there. So why do I want to know where it's supplied? Because the place of supply is very, very important. That 50%, the another 50% share is for which state? For that only we need to know, okay, that place of supply. Clear? So for supplier supplies the notes to you or some goods, okay, some goods. You pay the money, consideration 100 rupees, and GST applicable on this, you will directly pay to the government, 18 rupees. You don't pay the 18 rupees to supplier, and supplier will remit on behalf of you. No, it's not so. This is called reverse charge. This is called reverse charge. Clear? So usually in your practical life, you see only this situation. The supplier collects the GST also from you only. Okay. If you are given this option, go for reverse charge, what will you do? You will not deposit. It will be converted into some eatables. Huh? Understand? So reverse charge will not be applicable for your case. But where it will be applicable for a big, especially import of services. If you are importing the goods from where? USA, and you are in India. Okay. Recipient. You get an architect design. Architecture. For that you make the payment. Say it is around 10 lakhs. For that GST, who has to pay? As per the normal provisions, 18% assumed to be 1.8 lakhs. GST will be payable by supplier only. Now you use it for your own residential house property construction or business purpose, doesn't matter. In case of import of services, okay, the purpose is not a matter. It can be for your personal purpose or business purpose, doesn't matter. It will be supply only. And who has to pay the GST? In general sense, supplier. But only because of this one transaction, if I ask the supplier to register with the Indian GST rules and regulations, he will say, I don't want to supply. Only for one transactions. He says, you are the only person in our ever life you purchased. Okay, usually it supply only within USA. So because of your supply, you don't want to register with the Indian government. Okay, Indian GST law. Then in this case, no problem. We'll give the relief. Okay, you can directly pay to the government. Okay, you pay 10 lakhs to supplier and 1.8 lakhs to the government yourself. So the reverse charge also sometimes very, very important, needed. Okay. In what are the scenarios these reverse charge may happen? Let's see for one more example. Now, you heard about the packers and movers, right? Packers and movers helping to shift your house property. You want to shift your house property from one location to the other location. You call the packers and movers, they'll pack all the items neatly and transport to the other places and guaranteeing no damage will be there. But finally, if you verify, TV will not work. Right. So packers and movers, and you get the order. You get the order. What job you assign to them to shift your house property. The packers and movers helping you to shift your house property, supply of services, and they levied a charge. Say for this consideration being 1 lakh, and you have to pay the GST 0.18 lakhs. And the amount is collected and deposited with whom? With Government of India. Is that clear? So this is called forward charge. Now what happens? A lorry driver just now purchased a second-hand lorry for rupees 10 lakhs or 5 lakhs. Now and then the lorry will run, or sometimes he has to push the lorry to drive. He is a layman, doesn't know anything. Just he purchased the lorry in second hand. You asked him to shift your house property. The first order he gets from you only. Sundara travels like he comes to your home to shift your house property. Supply of service is rendered and demands you to pay consideration 1 lakh. What about the GST? Who has to pay the GST? You get these services for your personal purpose. Personal purpose. So GST not paid by anybody. For you also, you are not paying the GST. Lorry driver who does the business only once a while, okay, his overall gross turnover in a year itself around 10 to 12 lakhs. Minimum 20 lakhs should cross to get himself registered for the GST purpose. Now, lorry driver being non-taxable person. Who you are? Are you a taxable person? No, sir, I am not taxable. Taxable person means taxable person under GST. Okay, you are not being the taxable person under GST. You are getting the services. For that services, you have to pay the consideration. Okay, if you go for ordering in Swiggy or Zomato, food price is 300 and GST 5% is 315. 15 rupees is collected from you and deposited. Okay, you are not going to pay. Are you going to be the taxpayer? No, sir, I am not registered taxpayer for the GST. But of course, I am registered taxpayer for the income tax, not for the GST. Similarly, you are supposed to transfer your house property, shift your house property from one place to another place. You approach a lorry driver who just now purchased. His turnover is also less than the limit. Requires no registration, is a non-taxable person. He renders the services and collects 1 lakh rupees. Now, what about the GST payment? He is not a taxable person, he will not collect the GST. He will not collect the GST. Is that clear? Now, so if you are approaching the packers and movers, you have to pay 1.18 lakhs. If you are approaching a small lorry driver, you will get only, you need to pay only 1 lakh rupees. In my case also, I plan to shift from Chennai to Trichy. When I shut down my operations there in Chennai, all the furniture available there shifted here. I just asked the packers and movers, the GST itself equivalent to the price available. Price is, the GST itself equivalent to the commodity I have there. I said no. Then immediately approached the lorry driver without GST. It transferred from there to here. Okay, also possible. Now what happens? A lorry driver, you can get it much discounted rate. Lorry driver and PNG, Procter and Gamble, PNG. PNG gets the services from lorry driver. Supply of services, what? Supply of means transporting their own manufactured goods or purchased goods to be sold throughout India. Throughout India. The lorry driver now demands a consideration rupees 1 lakh. Now the question is he a taxable person? No, sir. The lorry driver's turnover is less than the amount required for registration, so he is not being the registered person, he is not registered at all. Now what about the PNG? He is a registered person, taxable person. Okay, his size of business is huge, voluminous. Now the burden is shifted from lorry driver to PNG. PNG now government demands PNG for the 1 lakh rupees you have to pay the GST directly to me. So now PNG should pay the GST to the government directly, 18,000 rupees. Okay, so the option being the forward or reverse is also used, needed. Predominantly, the supplier being the capable of maintaining all the documents, it may be forward charges. The recipient being the capable of maintaining all these things, most probably it may be RCM basis. If supplier is not being responsible, no other way, we have to collect it only from the recipient in case of import of services. Then also RCM basis may be applicable. Is that clear? Sir, if he simply cheats to pay this Procter and Gamble, what happens, sir? He can nicely escape. No, no problem. There will be a check in income tax. In income tax, in P&L account of PNG, they debit freight and forwarding, carriage and forward charges, right? Or carriage outward charges. 1 lakh rupees if they debit this. Immediately, income tax department will ask for where is the GST for this, sir. Sir, GST you have not paid, sir. No problem. This amount is disqualified to be debited here. Under section 40, class A, we have studied that. Wherever tax is applicable, if you not debited this amount along with the tax, then automatically what happens? This 1 lakh cannot be debited in your P&L account. If you don't debit this, your profit will increase by 1 lakh. For that, you have to pay 30% tax, 30,000 rupees. Would you like to pay 18,000 tax or 30,000 tax? That's your choice. So nicely. So you have the forward charge as well as reverse charge mechanism also. Clear? Now let me explain one more concept called ITC, input tax credit concept. Input tax credit concept. What is called ITC? Input tax credit concept. Input tax credit. Now, before I deal with the input tax credit, what was the earlier tax structure exist? Let me finish up that first of all. Huh? This itself VAT. This itself VAT. Okay. The current tax rate is the VAT. Okay. Earlier we had the final point tax. Okay. C A to B to C to end consumer. Okay. A buys for 100 and adds his own value rupees 50, 150 is a price fixed for selling this. B purchases it from A for 150 and he adds another 100 rupees from his side and it may be 250. For example, cotton, thread, cloth, and finally cloth is sold. A manufactures cotton, packs in nicely packed, and for that he demands 50 rupees for his own charges and all, and 150 is the final price. He transfers this to B for 150. B again converts this cotton into thread. For that there may be some expenses and his own normal profit. So for that he adds around 100, 250 will be the final price. And it is transferred to C for 250. He converts the thread into the cloth by incurring another 150 rupees. 400 rupees is the final cost. And earlier, no, the tax is leviable only when it is going to be saleable from end seller to the consumer. As the goods are transferable to the consumer, immediately say 10% being the tax rate. So 40 rupees is tax added and 440 is the final price fixed and sold to consumer. Is that okay? But the problem here is C can simply now negotiate with the consumer. Do you want bill without bill, sir? What happens if he ask for bill? If you ask for the bill, you have to pay me 440. Without bill means 400. Oh, directly 10% discount is there, no? Give me without bill. Such a manipulation may be chances. Okay. In order to avoid this, automatically VAT system was introduced some years ago. Okay, earlier it was a mod VAT and then VAT, sen VAT, then later VAT. Now it's now GST. It's also a variations of VAT only. It's also VAT only, value added tax. Initially, when I joined for the CME Inter, no, by the time last batch they had mod VAT. My batch started with sen VAT. Okay, modified value added taxes, and later on centralized value added taxes. Okay, central value added taxes, and thereafter it's Tamil Nadu VAT for the local Tamil Nadu government sales tax named as Tamil Nadu VAT. Okay, now one tax, one nation GST came. It's also a VAT system only. As per this VAT system, from A to B, B to C, C to D, end consumer, goods are transferred, right? So for him, 100 rupees, he adds another 50 rupees, 150 rupees, 150 rupees. Assume the GST being 10 percentage. Immediately, A demands 15 rupees GST on his value, 15 rupees. Is that okay? So, this will be the GST amount collected and payable by A to the government. This is the amount payable to the government. Payable to the government. How much A has to pay? 15 rupees has to pay. How much B paid? B paid to A for procuring this material being 165. But what is the material cost here? 150 will be the material cost. This 15 rupees he paid for the GST, no, will be named as input tax credit. Abin claim it back from the government. That's why it is called ITC. Okay, whatever the tax you paid while purchasing any commodity can be refundable. Until that period, it will be named as ITC, input tax credit. Now he adds around the 100 rupees for his own value addition. This is called value addition. Now B says, now the price is 250 rupees, sir. You have to pay me tax on this at the rate of 10%, 25 rupees. 25 rupees. C now pays 275, but the material price is only 250. This 25 paid by C while procuring the material can be recoverable from the government as ITC will be for an asset in his own books. Okay, that is called ITC. Now, what is the tax payable by B? 25 is the tax payable for the output supply, and 15 rupees tax paid on input tax is refundable. From this refundable amount is subtracted, balance 10 rupees is the amount payable to the government. And in case of C, 250, he adds around 150 rupees as his own value. Okay, value added, so 400 rupees. Now he adds 10% while selling. Now, end consumer purchases at 440. Sir, what about for him, sir? Will he be able to get the 40 rupees back? Definitely not so. If he is going to further process it and while selling, if he collects any GST, only then ITC is available. For him, ITC is not available. 400 plus any GST paid on purchase will also be forming part of cost. So, for what happens in your case? If you are ordering any food item in Swiggy, 300 rupees plus 15 rupees GST, you have to pay 315. You will not be getting the 15 rupees back at all, right? So only 315 is your ultimate cost. Now, how much tax is payable by C? 40 rupees is payable, but anyhow he has to get 25 rupees from the government. So from 40, 25 is subtracted, 15 rupees is the amount payable to the government. What is the ultimate payment received by the government for this sale? 15 plus 40, 10 plus 15, 40 rupees is the overall tax received by the government. So earlier also 40, here also 40. But what is the advantage between this model and that model? If the thing happens the last stage, there is a chances of manipulating. So C may say, sir, do you want the bill or don't want bill? Okay. By asking this question, he can sell the goods without bill, and by doing that, he can simply make a loss to the government. Okay. Now, now, so what happens that in this case, C can also interact with himself with bill or without bill. If C supplies to the consumer without bill at 400 rupees, in his books with the government, there will be 25 rupees available in his credit. Government will question, how do you get that 25 rupees? What happens for this material? You could have processed further, could have sold. No, where is that goods? So you will be now getting caught. Or you have to tie up with all the three persons, A, B, C, all the three persons to cheat, which is really not practically possible. In a chain of supply, one fellow says, I'm very straightforward, I will not accept, then automatically getting caught. There will be chances for manipulation. That's why this method seems to be more systematic as well as logical. There will be reduction of tax evasion. Tax evasion is reduction. And this will be called as value added tax. Why, sir? What is the value added by B? Value added by B is only 100, and tax leviable by B is also payable by B is also only to the value addition. And for C, 150 is the value addition, and tax paid by C is also only tax on his value addition. So every person, to the extent of value added by him, is subject to be taxability. Okay, that's why it is called value addition tax. Or it may be otherwise named as multi-point tax. The final 40 rupees tax is not collected from single hand at the last. It will be collected from multiple hands. A small amount, B small amount, C small amount. And another name being consumption based tax. Consumption based tax means who is the end consumer? Who is going to bear the entire tax? If I'm not being the, B is not being the end consumer. So if he is not being the end consumer, whatever the tax he collects or pays can be recoverable. So A can simply recover this 15 back, the amount paid, and this 25 also collected and deposited. He is not going to worry about the tax payment. Then who is going to bear that entire tax? Only the end consumer. That's why it is called consumption based tax. Multi-point tax, consumption based tax, or value added taxes. These are the features of current tax structure. Clear? If you have any doubt, you can ask me. So I explained you about the forward charge as well as reverse charge. Why do we want to have the two structures, sir? Naturally, predominantly supplier are capable of maintaining all the books. So majority cases forward charges. Some cases recipient may be more capable. Then the tension is now transferred to the recipient's head. That's why we have the RCM basis also. One case. And what structure we follow? We follow the VAT. Okay, value added tax. Every tax you pay while purchasing raw material, automatically I can get it back as input tax credit, provided I need to further manufacture and supply for a taxable product as a taxable product. Okay, if there is any output tax, then input tax can be returned back. So difference will be the ultimate tax I is supposed to pay to the government. Clear? Now, you have to understand one more point here. What's that? Now, we may think some AC company. What's a Tata AC? What's their product? Tata AC. We'll see LG AC. We have this LG AC company, a showroom. And buyer. If you are purchasing the AC from LG showroom, you have to pay the consideration. You are using it for what? Personal purpose. Okay. Consideration in this case being 50,000 rupees. What about the GST, sir? GST is applicable. The rate of 18%, probably 9,000. 59,000 you have to pay. Clear? Because you are going to use it for your personal purpose. C, LG and buyer B, who buys is for his business purpose. Business purpose. Maybe he may have the green trend beauty salon, spa and salon, right? Green trend. He wants to install the AC for his business location. And the consideration being 50,000 rupees. What about the GST? 9,000, 59,000. Can he get the 9,000 back? Yeah, of course he can get the 9,000 back. Though he paid 59,000, this becomes his own ITC. B later on renders spa and haircut and beauty support services, whatever it may be, to their customer. Okay. Spa and all. For that, the consideration levied being 1.8 lakhs. This GST paid for purchasing the AC can be recoverable from here. So 1.71 lakhs is the ultimate GST has to pay. The GST paid while purchasing AC can be subtracted from here, named as ITC. So there are some restrictions. We'll see all these things later on. All the GST paid on input goods not eligible, but we'll see that later on. Okay, blocked credit, apportioned, and all these things learnable later on. So if you are purchasing the AC for your personal purpose, the cost is 59,000. If you are purchasing for your business where ITC is eligible for that, then your cost for purchasing is only 50,000. You are paying only 50,000 rupees. Now this fellow, though he purchased the AC, consideration is paid, transfers to B's residential house property. Sir, installed to my personal room, sir. So now the AC is installed in the personal room, not for the business purpose. Cheating now. Otherwise, the AC comes, the next day the AC is transferred to his own home, stating it's only 50,000. This fellow enjoyed this 9,000 rupees deductions while paying the GST. Now the AC is only 50,000. Ultimately, he transfers the house proper this AC for his own personal purpose. If he purchases it directly from LG showroom, he has to pay 59,000. But routed through this way, he pays only 50,000 rupees. It seems to be cheating, you know. That's why this schedule number 1 comes. Schedule number 1 comes. Is that okay? Without consideration will also be supplied. Why? Sir, I purchased for my business, sir. I disposed. Okay, how I am disposing? Gifting to my friend, relative, my family, or donating. Okay, without any consideration. You can donate 50,000 rupees, no problem. But you don't have the rights to donate in government's income. While transferring the business asset to your personal purpose, where ITC is availed, disposing out of your business will also be considered as supply, whether there is a consideration or not. So, no consideration still will be considered as supply and you have to pay the GST on that. So, immediately government demands, no, sir, no consideration. No, this is supply, you have to pay 9,000 GST to the government. It's a cheating like, right? If you are directly purchasing, you have to pay 59,000. If you are transferring for the business and later from business to some relative's house or some friend's house or for donation purpose, if you are transferring, you are enjoying the ITC, right? Stating that, sir, I am donating. No. If you are donating where ITC is enjoyed automatically, this will be supplied. The ITC avail will be reversed to the government. Reverts to the government. Hope you will be now able to understand the logic of ITC and all. Let's see here. Schedule number 1. Permanent transfer or disposal of business asset. Okay, supplier to business, 10,000 rupees, GST 1,000 rupees, where you can claim the ITC on this. This GST, this is the consideration. What about this one, sir? ITC availed or not? This one, ITC availed, sir. Later on, if you are disposing to third party, okay, automatically it is supply. Sir, no, sir, I didn't claim the ITC, sir. Then not supply. Not supply. Okay, permanent transfer or disposal of business asset. Supply if ITC is availed. No, sir, ITC not availed, sir, or blocked credit, sir. For some of the materials you purchase, you are not eligible for claim the ITC. You will study that in the chapter ITC chapter. That will be called as blocked credit. In case of blocked credit, you are not eligible for ITC. In that case, of course, you can transfer without any tension. Without any tension. Clear? Now, some examples. Donation of old laptops to schools, but ITC claimed, then supply. Motor vehicle transfer, not supply. Because in case of motor vehicles, ITC predominantly not allowable. It's called blocked credit. So ITC is blocked. In that case, it's not supply. Personal asset after use. In case of personal asset, what happens? So you purchase the LG AC by paying 59,000. After that, if you are donating, no problem. If you are purchasing for the business purpose, later from business to other purpose, then automatically GST will be applicable. It's supply only because there is chances of it. So not supply. Hope you'll be now able to understand the first case. Schedule number 1. Schedule number 1. Supply even if made without consideration, certain transactions are considered as supply under GST. Even when no consideration is involved. Number 1. Permanent transfer or disposal of business asset. Supply if input tax credit is availed. Not supply if not availed or blocked credit. In case of old laptop, ITC claimed, so it is supply. Free transfer of motor vehicle, ITC is blocked, so not supply. In case of personal assets, you are not eligible for availing, so not supply. Clear? Next. Supply between related or distinct persons. Now, if it is supply between related persons or distinct persons, then it will be considered as supply only. Okay. Now, related persons. First, let me finish up this one. Related person explained under section 15. Distinct person explained under section 25. Let me explain these two for your better understanding. Okay. XYZ entity and director. Director. Okay. These two are called related persons under GST. Clear? If there is anything transferred between XYZ and director without consideration, if it is in the course of business, automatically will be considered as what? Supply only. Clear? Otherwise, XYZ Limited Company, ABC Limited Company, and Mr. X being the director of XYZ Limited Company as well as ABC Limited Company. If anything supplied by XYZ to ABC, in return there is no any consideration. Yet this will be coming under supply only for the GST purpose. Is that okay? Because controlled by Mr. X. Now, related persons. Let me explain this. Under GST Act, persons are deemed to be the related person if officers or directors of each other's businesses and legally recognized partners, ABC and firm, and ABC are the partners. If the transfer happens between these two, will be considered as related persons. Employer-employee relationship exists, also be considered as related persons. And voting power, 25% or more voting power, then also based on the ownership related persons. Okay, ABC Limited Company, where A being the shareholders holding more than 25% shares, then these two are related persons. Or XYZ Limited, there also A has more than 25% voting power. So A and ABC related persons, A and XYZ Limited also related persons. ABC and XYZ also be related persons. Not only ABC and A, XYZ and A. ABC and XYZ also be related person because there is a common shareholder A controlling both. Not necessarily holding more than 25% shares. A can control ABC as well as XYZ. Other than that, probably unless A supplies the raw material, ABC cannot operate. Or unless A purchases the goods from ABC, ABC will not be operated. Then also considered as related persons due to the control. One controls the other, or both are controlled by the third persons because of the control also. Even family relationship also. In a family, we have the family relations also be considered related persons. Employer-employee relationship also related persons. More than 25% shareholding also be related persons. Control because of the shareholding or some other reasons, if I'm able to control the other company, also be considered as related persons. In case of family member relationship, also be related persons. Family means spouse, children, spouse and children. Okay, so who are called family? If I'm talking about A, okay, spouse of A will also be related persons, and A's parents, father, mother, grandfather, grandmother, and all, brothers and sisters, all provided father, mother, grandfather, grandmother, brothers and sisters, they should be wholly or mainly dependent. So dependability is not required for the spouse. Other than spouse, other family members will be considered as related party only that member being wholly or mainly dependent on this assessee, this person. Is that okay? Spouse and children of the person, dependability not required, but parents, grandparents, brothers, sisters of a person, automatically will be related persons and forming part of family only if they are wholly or mainly dependent on the said person. Mr. I holds 35% shares in A Limited. Okay, A Limited. 35% shares held. And 40% shares in X Limited. Then for related person, I and A related, I and X also related. And what about A and X's are? Also be a related person, because A and X both are controlled by the same person. Right. Q Limited has deciding role in corporate policy, operations management, and quality control of R Limited. Now, it is not due to what? Shareholding, but controlling rights. Control means somehow influence the decision of other company. So here, Q Limited has a deciding role in corporate policy, operations management, and quality control of R Limited. In this case, these two are called related persons. These two are called related persons. Is that clear? If these two are related persons, if the goods are transferred, supply of services or goods are there, supply of goods or services. In return, there is no consideration, yet this will be considered as supply only as per schedule number 1. If the transfer happens between the related persons, automatically this will be considered as supply only. Consideration is not required. Consideration is not required. Is that clear? Hope you'll be now able to understand this one. So, first one is all about what? Based on the ITC. Business asset. You have to note this. Business asset, disposal or transfer. Permanently. Where, while purchasing the business asset, ITC is availed. In that case, if you are disposing, this will be supply. If the ITC is not availed or ITC blocked, of course, while disposing, it is not supply. It is not supply. And supply between related persons or distinct persons also be considered as supply, whether the consideration is there or not. Okay, clear? If the transfer happens between the related persons, then automatically it is coming under supply only. Supply only. Anyhow, we have already studied employer-employee relationship. Employer-employee relationship. Employer-employee relationship will be related persons only. If employee renders service to employer, in return employer gives no service, still that will be supply only. GST is applicable, provided some exception is there. Let me see that. Exception case number 1 related to the employer-employee. Clear? Now, employee rendered services to employer. In return, employee offers payment to employee. Okay. What's that? Maybe salary or perquisites. What's the work done by employee to employer? Employment services. While getting the appointment, there may be terms of condition given by employer to employee. You have to do so many activities every day. Come to office by 9 o'clock and you are allowed to leave only by 5 o'clock. 1 hour rest. You have to do. These are the work for our company. This will be called terms of employment. These are called terms of employment. Is that clear? This employee has some special talent. Okay. Probably he is a good singer. Employer wants to have a meet and asking employee to perform an orchestra. Immediately employee does this orchestra for employer purpose. For this, a special fee is paid. What about this case, sir? This will come under supply. Whether the fees is paid or not, yet it will be falling under supply only. Any activity done by the employee to the employer not in the scope of employment, for that the consideration is not there, still will be supply. Still will be a supply. Is that clear? Or employer requested to do the same service to employer's friend. Go and do the same activity in the holidays for my friend's home or his own business. I'll pay some extra. This one will also be considered as falling under supply. Okay, as per the terms of employment, what are the services are going to be done or performed by the employer for employee to the employer? For that, he gets salary or perquisites will not come under supply. Apart from that, everything will be supply. Employer now and then offers some gift to employee. There is no in return any benefit from the employee. Also supply. Also supply. Provided if the value is less than or equivalent to 50,000 rupees, will not come under supply. Okay, will not come under supply. Let's see. Employer-employee relationship. Gift up to 50,000 rupees offered during the Diwali, birthday gift and marriage anniversary, whatever it may be, not forming part of supply. No need to worry about that. Salary or perquisites offered as per the employment contract, also not forming part of supply. Payment for premature termination. So employer offered him to work for 5 years. Suddenly 3 years later, employer says, I don't want your service anymore, you can leave the organization. So suddenly if you are sending me out, it's a big loss for me, sir. I cannot get the job immediately. No problem, I'll give 3 months compensation. That is called premature termination compensation. That premature termination compensation will not come under supply. And salary payable to the partners by a partnership firm. For all these things, of course, GST will not be applicable. GST will not be applicable. Clear? Provided payment for services not covered under employment contract. This one. GST will be attracted. This is applied. GST is payable. Who has to pay the GST? Naturally, employer being the registered person, employee may not have all these things. So, may be payable under RCM. May be payable under RCM. A reverse charge. What happens, sir, if the gift worth more than 50,000 rupees? Fully taxable. If the payment is 60,000 rupees and GST on that, probably 10% means 6,000 will be payable to the government. So if it is not paid by the employer to the government, what happens, sir? This 50 cannot be debited to his own P&L account. It increases the profit and automatically has to pay the tax at the rate of 30%. That's his choice. Okay. And fringe benefits to employees. Fringe benefits. And of course, reverse charge will be applicable unless it is exempted. Fringe benefits. Okay. Any fringe benefits. What are the fringe benefits you have studied in your taxation? Tea, snacks, non-alcoholic beverages during the working hour, and club membership and all. If those things are exempted, then automatically you can forget. If it is not exempted, then automatically it will be subject to supply. Clear? Now, employee classifications. Employee classification 1 and 2. Okay. XYZ Limited Company. Mr. A, Mr. B. He is also director. A is also a director. B is also director. But Mr. A being the managing director will come now and then as he wishes. But Mr. B, being the whole time director, should come to the office at 9 o'clock and leaves the office only by 6 o'clock, and maintains the record for whatever the actions he has done and all. He is responsible for the top officials. In this case, this director B appears to be employee like, and director A appears to be originally director only. Directs and leaves. He doesn't stay in the office for the whole day. So in this case, employer-employee relationship is there. Okay, then GST will not be applicable. Here, employer-employee relationship is missing. Then automatically, this will be falling under supply. This will be falling under supply. Employee classifications. Employee classifications. Okay. Whole-time director, executive director, they will be classified as employees, so GST will not be applicable. Managing director, considered as not being the employee, non-executive, independent, nominee director, and all the cases, GST will be leviable under reverse charge. GST will be leviable under reverse charge. Is that clear? Then, next, supply of goods between principal and agent. Principal and agent. Okay. So, principal and agent. May be possible. What? Principal may send the goods to A. Okay. A will sell the goods to customers and gets the payment and remits the payment, whatever it may be. Okay. Now the question is this forming part of supply or not? Is it supply or not? Okay. Now, if A issues invoice, okay, invoice from whom? From A to C, and amount, everything is given. If the invoice is prepared by whom? By A and issued C. Issued to C. Then it is supply. Then it is supply. Is that okay? Invoice. Invoice. A's name. What about the status, sir? Supply. Principal's name itself is merely a broker. So A says, sir, I am not the owner, sir. P is the owner. I will get the invoice from him and I will give the invoice to you. You just directly pay. I will get a meager commission. Then it is called broker, commission agent only. It is called commission agent. But A can issue his own invoice, means he has the rights. He purchased it from P and he issues further in his own name. Whatever the issue is there with the product, come to me, I am responsible. So this bill is mine. And he takes the responsibility. In that case, if the goods are transferred from P to A, automatically it is supply only. It is supply only. Is that clear? P to A will be supply. Okay. Very, very important concept. Supply occurs when the agent issues invoices in his name, in his own name, on behalf of the principal. Okay, this is a sales agent. In this case, we call this being sales agent. And P A seller. Seller supplies the goods to A. A sells the finally sends the goods to P. And P gives a consideration PA, and A releases the consideration to S. This is another scenario. In this case, we can call A being the procurement agent. Procurement agent. So you might have heard about the say agent for sales purpose only. No, sometimes we have the agent for procurement also. You can sell the houses through the broker. Broker is a sales agent. I need to purchase the house property. I can approach the agent. He can help me to purchase this house property. Also, agent. Is that okay? So it's not only sales agent, it may be procurement agent also. In case of procurement agent, A raises the invoice in his own name. Okay, the invoice is from A and to whom? To P. In this case, automatically this will be supply only. This will be supply only. Is that clear? Examples of agent: procurement agent, sales agent. And we need to have one more agent called auctioneer. So auctioneer. Okay, in auctioning, right? The final price is fixed on behalf of the seller and all. In that case, supply will be determined based on the agent relationship, principal and agent relationship. Whether the principal and agent are really principal and agent or merely a broker. Merely a broker means only for a commission, he acts, and invoice, everything will be only in the name of principal. But if I am being the agent, really genuine reason, then all the invoice will be in my name. Okay, all the invoice being in my name, then supply will happen. Clear? Clear? The last point, very, very important one. You have to link this last point with first exceptions. First exceptions. Okay. Now tell me, what are the conditions we have in case of supply? Supply, okay, of what? Especially service only. We are going to talk about import case. Import case. Supply of services, consideration, purpose, business or furtherance of business. Okay. Now here, of course, it is import of supply of service. Consideration is there whether the business or furtherance of business exists or not. No problem. This will be supply only. This will be supply only. Already we have studied. Now, import of supply of service. Consideration is missing related to the business, and I am introducing one more item: related persons. A related person and distinct persons. Distinct persons I have to explain. This part I have not completed yet. So I have completed related persons. I have to explain distinct persons there. Related person always includes distinct persons also. Here it is not applicable. Here, yes. Then it is supply under schedule number 1. This will be supply under section 7. Hope you will be now able to understand these two components. When it is all about import of supply of services, import of services, not goods, not goods. In this case, consideration is present, purpose is not present, then it is supply under section 7. Okay, Supply of service. Consideration is missing. Purpose is for the business. One more item. This is transferred between the related persons. Related persons. Then automatically consideration though may be missing, yet it will be supply under schedule number 1. Schedule number 1. For example, okay, your brother is in foreign country and you are here. You are getting the architect service from your brother to India, right? And for that consideration is not paid. As he is your brother, you don't get, you are not paying any consideration. And brother and you both are, who are you? Related persons. When your brother being mainly or wholly dependent on you, okay, anyhow, if the relationship exists, the related persons. In this case, you are using it for what? Either for your personal residential house property purpose or your business premises purpose. In case of residential house property purpose, of course, it is not supply, but if it is used for the business purpose, then automatically this will be a supply. This will be supply. Between the related persons, So this point is very, very important. Import of services from related persons or other establishments outside India. Distinct persons. I will explain that later. Supply, if used in the course or furtherance of business, the business purposes must, but consideration is not required. Example, an Indian branch imports services from its parent company abroad for the business purpose only, liable to GST. Liable to GST. Is that clear? Now, we'll solve one practical question here for your better understanding between section 7 as well as schedule number 4, 1, fourth item. Examine whether the following activities would amount to supply. Suleika manufacturers have a factory in Delhi and a depot in Mumbai. Let me explain the distinct persons first of all. Okay. Now, distinct persons. Here is distinct persons. Two terms are going to be defined. Distinct persons, established. If a person has multiple registrations, and in that case, each registration is treated as distinct persons. Okay, you can have only one registration number for a state. If you operate in 2 or 3 different states, then you need to have separate number for each and every state. So can I have 2 or 3 numbers for the same state? You can, but provided the business will be totally different. Same business, you cannot have 2 GST number. Okay, if I have 5 GST number for the same business, it's cheating. Because for every GST number, 20 lakhs exempted will be given. You need to register. This fellow got around 5 GST number and 5 different locations. That's the business within same state. Okay, collectively it is more than 1 crore, but independently the value is less than 20 lakhs. He says, I don't want to register. No, it's cheating. But each and every business is totally different, then you can have multiple GST number, no problem here. So for every state, he needs to have 1 GST number for every kind of business. Singer Academy may operate his business in 3-4 locations, probably Trichy, Chennai, and Kodaikanal. Okay, for all the 3 locations put together, I can have only 1 GST number because I have all the 3 within the Tamil Nadu state. If I have one in Tiruchi, another one is Tirupati, then automatically I have to apply for GST number for Trichy separately to Tamil Nadu. Another one is Andhra Pradesh GST number for this separately. Is that clear? So here I have two numbers, here I have one number. Sir, can I have two numbers in Trichy itself? Of course, this is Singer Academy. For Singer books and publication, I can have another separate GST number. That is separate entity. That is separate entity. Because here we give the coaching, here we sell the books and the videos. Those two are separately linked. So I can apply separately a GST number for Singer books and Singer Academy separately. No problem. There we don't have any problem here. Clear? Now, if I supply the goods from Trichy to, I have Singer books and publication in Trichy, Chennai and Kodaikanal. If I transfer the books printed in Trichy to Chennai, will it be coming under supply, sir? No, not supply. Because all the three will fall under the same GST number. But in this case, Trichy to Tirupati, Trichy division has separate GST number. Tirupati division has totally different GST number. In this case, if I am transferring from here to there, automatically it is supply only because these two are called as distinct persons. Okay, distinct persons. Probably establishment of distinct persons. Establishment of distinct persons. And this small difference between distinct persons as well as establishment of distinct persons. In case of distinct persons, individual person. That's all. Mr. A being the chartered accountant doing audit office or running audit office in Trichy and starts and running audit office in Tirupati. So he has two different GST number for the two different locations. Here also the same A is their auditor and here also the same A auditor is there. Okay, but this is different, this is different. So the same person will be named differently for the GST person, distinct persons. In case of establishment, entity wise, then it is called establishment of distinct persons. Hope you will be now able to understand. If a person has multiple registrations, whether in one state or union territory or across multiple states or union territory, within the state also you can have multiple registration. How it is possible? I may have the registration for coaching separately and books separately, also possible. So I am being the same person having two distinct registration for my two businesses. Each registration is treated as distinct persons. So SSA and SBB. These two owned by Mr. Sridhar. Okay. Though it is owned by Mr. Sridhar, if the SBB published and transferred from SBB to SSA, no consideration is transferred from here to there, yet it will be supply only. Yet it will be supply only. Is that clear? If a registered person has an establishment in another state, each establishment is considered as an establishment of distinct persons. Okay. So instead of individual person, if it is being the entity like, then it is called establishment of distinct persons. Okay. SSA is an establishment. SVB is an establishment. Then this will be called as establishment of distinct persons. So if I am talking about individual person, then distinct persons. If I am talking about the establishments, then it is called establishment of distinct persons. Let's now try to finish up this illustration. Yeah. Suleika manufacturers have a factory in Delhi and depot in Mumbai. Factory in Delhi and depot in Mumbai. So one is in Delhi, another one is Mumbai. Naturally, he will have two registration number, GST number, establishments of distinct persons because it's a factory establishment. Both these establishments are registered in respective states. This is registered in Delhi, this is registered in Maharashtra. Finished goods are sent from factory in Delhi to Mumbai without consideration. In return, there is no any consideration. Right. Now, come on, tell me. It is not import. Forget about the earlier case. Then automatically think about schedule number 1. As per schedule number 1, what happens? Supply and consideration and purpose, business or furtherance of business and related persons. This one is okay. Consideration missing. This is okay. This is okay. So all the three okay, but consideration only missing means schedule number 1 will attract as per this provision. This will be considered as supply only. Raman is an electronic commerce operator in Chennai. His brother, who is settled in London, is a well-known lawyer. Raman has taken legal advice from him free of cost with regard to his family dispute. Now what happens here? Related party. Consideration is missing. Supply is there. For what purpose? Is it for business purpose? No, sir. Related person is. Whenever it is all about related persons, automatically you have to go and see schedule number 1. Related person, family dispute. So his brother, automatically what happens? Related person case. So in case of related person case, the service is for business purposes must. Purpose is must. Purpose is absent. So automatically this will not be supplied. Would your answer be different in the above case? Raman has taken advice in respect of his business unit in Chennai. Then this case it is supply. In this case it is not supply. Clear? So comparison between section 7 as well as schedule number 1. Business purpose needed when in case of schedule number 1, yes. In case of section number 7, not required. Consideration in section 7, very much important. Schedule number 7, no, not required. Related person, not applicable in section 7, but in case of schedule number 1, yes. Predominantly, this will be for import of service. Import of service. Okay. So, majority concepts related to the supply is over. I need one more session for completing the supply alone. In GST, supply chapter is very, very important. Okay, it takes at least 2 or 3 sessions. Once that topic is over, rest of the topics are one lecture. Like, especially exemption, I need extra classes. Otherwise, everything is pretty simple. Okay.